What an absolutely beautiful day today. Very, very quiet. We just waited for levels. We were very patient. Things ended up working out in our favor. So I tweeted earlier today that on the QQQ 330, this trend line essentially, 339.75 needed to hold. And we were going to buy puts below it, and we were going to buy calls if it stayed above. So obviously that worked out perfectly to the downside. We saw that we are extremely overextended on the Qs, and it just reclaimed this March 2020 bottom level. And if it didn't hold, then it would have fell. And we reclaimed this gap to 337.10, and we fell below it even further. So it was a relatively amazing day today. Also, we caught the bottom on IWM yesterday as well, and we took a lot of profit, and then I had a stop loss as it fell below 224. So it worked out pretty well on that front as well. So yeah, let's get right into it. We're going to go over the broad market and what we could do in the future. Okay. All right, so here's a 15-minute chart of the SPY, and I was saying that we would be constantly bullish until proven otherwise. So proven otherwise means we would have to break certain support levels. So we were in this very nice support level from April 7th and multiple touches, as we can see, and we broke below it. So upon this break, that's when you could have gone bearish as well. But instead of shorting the SPY, I chose to short the Qs and alert that instead. But now what needs to happen is this oversold condition needs to be met, because currently we're oversold. So that means that technically the SPY can continue to rise upward, right? So what we need to see for continued downside, this MACD needs to cross above this yellow line, okay? And essentially the SPY's price needs to remain stagnant around here, okay? So if the MACD line responds poorly, then we can see continued downside. So another thing that I really want to see is if we can potentially rally back to this resistance level and then have people re-add into shorts potentially and then bring it back even lower. So we're going to be looking for these things, but currently the SPY is oversold. Definitely, I mean, you could have shorted it and had a stop loss at the highs, but you know it was way safer to wait for a break and then short it instead of shorting it now that we're at the bottom here. Okay, so what we want to see first is we would want to see a break at these support levels, and if it breaks this, then you would wait for it to retest this level here, and then you have a stop loss just a little bit above, and then potentially you would fall back down even further. Okay, so that's really what's going on the SPY on the short term. The QQQ very similar. Let me fix this up real quick. All right, so here's the Nasdaq's chart on a 15-minute from April 7th. Beautiful trend line upward. And before we became bearish, we needed to see a cross below support. I was saying that we were going to remain bullish until proven otherwise. This is a proven otherwise moment. So now we need to see how, again, the QQQ is responding with the MACD, especially at a resistance level. Okay, so we need to see if we can cross back above this resistance level. If it can, then we need to see it retest the breakdown point. Okay, if it can't reclaim these levels, then, you know, as we see it fall back down, you use these levels as a stop loss for your puts, okay? That's going to be the play for the coming days, most likely. Let's see how we open tomorrow. But currently, you know, we caught the break from 339.75. So, you know, we're very well rounded in regards to this trade currently. So that's pretty good. That really is it. So now let's look at the daily chart on the Qs. Okay. All right. Let me clean this up here. All right. So here's a daily chart. Yeah, we broke down below the March 1999 level on the Qs, uh, as well as the March 2020 bottom level, which was right here. Okay, so now um, there's multiple levels and layers of support on the way down, but it's going to be very, very interesting to see how on the daily chart we are extremely overextended and we're starting to cross down below this MACD line. Okay, so if we cross down below, especially at highs after we broke two levels of support, that could potentially be very, very bad for the Qs. So bad, actually. I don't think that this move downward is going to happen. What might end up happening is we'll end up falling down to maybe 334, 335 potentially around this area, and then find a bottom and re-rally upward because this is so bearish. This negative divergence on the MACD is so bad. I don't think that they will bring it down from here heavily. Um, because it's still the middle of the month. Um, Funds essentially still have the rest of this month to remain bullish on the tech sector. So I think they're just going to wait for a bit of a dip, wait for a consolidation around support, and then bring it back higher. So let's see what happens. That's the chart of the SPY or the Qs. The SPY um, would look pretty similar as well. As you can see, multiple green days. We're about to cross down below on the MACD. Looks very similar. If you want to short, you could short as a stop loss at the highs, and potentially you would fall back down to this level at 407.50. Pretty good risk reward trade, and that's what a lot of these traders on the floor thought today because we were very overextended, multiple green days, divergent on the MACD. We're about to cross down below, and it was just a very, very good short opportunity. If you had millions of dollars, okay, at your disposal, you would not want to put millions of dollars long currently, right? Today, you wouldn't want to go long with millions of dollars. You would rather go short and have a tight stop loss. And that is exactly what happened. If we look at Apple, for example, Apple also had somewhat of a resistance level and it fell down. It couldn't retest it. Same thing with Tesla. So we got into Tesla. Obviously, we sold it at the open. I alerted earlier. I think the Tesla calls were up maybe 140%, 130, 140%. Those did pretty well. But again, this resistance line, it acted as very nice resistance. So, Tesla couldn't reclaim this. And I was saying that, if Tesla reclaimed this, then we would see 850 potentially. But that didn't happen. Anyway, let's look at the US 10-year yield. Not really doing too much currently. Very, very oversold. It could bounce. That's fine. The correlation really isn't there currently, but I'm just going to continue showing it. The dollar had another huge red day today. But because the indices were very, very overextended, everything just became very, very tired and fatigued to the upside. Crude had a very, very strong day today. Okay? Like, crude looked amazing today. But yesterday would have been the day to get into crude, but it was my first day back, and I overlooked crude. I made a mistake. I should have looked at crude oil stocks and energy stocks, but I got excited and made a bunch of money on other stocks, which is fine. Yeah, so that is that. If the Nasdaq continues to fall and the QQQ really starts to plummet, I think money should start funneling back into the IWM. So keep an eye on the IWM. These levels are very important: 220.87 and 218 and 217.50. So those would be good support levels to buy into the IWM. Upward resistance on the IWM again is 224.10. So these levels just need to break for the upside. The Qs, if we see a vomit downward, money needs to go into somewhere. So the money is going to go into the lagging indexes. So the IWM clearly didn't do as well as the Qs this month. So funds are going to look at where they can put their money in for the highest potential gain. So I believe it will be into the IWM. But the fact also that crude oil is doing so well currently, it means that, you know, these indexes aren't going to plummet as far. Okay, like this isn't going to be a huge drop. But, you know, let's see what happens. We are very, very overextended on everything. So let's see if we can retest 407.50 and potentially even fall back down below and retest 400. It should be a very interesting time. All right, so now let's go ahead and go over the stocks that you guys wanted me to check over for technical analysis. Bitcoin. Bitcoin is currently around a very interesting level. It needs to hold above the prior highs at 61,781. This is bit standard. So 6,200 really needs to hold. And a resistance level, a support level from January 21st had multiple touches, and now we are testing that currently. Okay, so it needs to reclaim that level for it to maintain its upward momentum. And truly, I mean, I really think I'm very bullish on Bitcoin. In the next, you know, within the next year, I feel like Bitcoin can easily hit at least 100, 150,000, which is very, very good for all of these other altcoins. I would just be very, very careful about getting into any, you know, fraudulent altcoins. But another reason why, you know, we had a bit of a downtick was because we are extremely overextended out of the Bollinger Bands, and today Coinbase IPO'd. So we rallied into that Coinbase IPO, and, you know, people took a lot of profits. And because of those profit taking, Bitcoin also took a hit. So these levels really need to hold. If 61,800 really breaks, then you know, a lot of things can happen with Bitcoin. It's a 24-hour market. Yeah, 60,000 would need to hold afterward. But again, many people in the crypto space currently are just looking at this as a dip buying opportunity. Especially if we fall back lower, many people are remaining bullish, especially until potentially 65 to 70,000 in the short term. That's what a lot of people on Twitter, etc., are saying. So I wouldn't be too worried about Bitcoin in the short term, in my opinion. All right, so this is PEN. Okay, so PEN is extremely dependent on the IWM as well. As you can see, it looks like it's about to cross down below on the MACD, which doesn't look very good. It's also in a potential bear flag, which also doesn't potentially look very good in the short term. This trend line needs to hold, and if we cross below $98, we can see potentially 95. So I would be very, very careful, especially at these levels. You could choose to go long, and you could choose to, you know, buy PEN here with a stop at around 97.50, somewhere below this trend line, really, and to see an upward move. So the risk reward currently is there. So I would be very careful though if you wanted to, like, the risk reward is there in the long term, but in the short term, in the next few days, I'm not sure how bullish this may be. It all depends really on the IWM and whether or not these trend lines can hold. All right, ZOM, it hasn't really given a very good, you know, buy opportunity. Yeah. So on April 5th, for example, April 6th, you could have also thought it looks very similar to today, where, you know, you had a really big green candle, but what ended up happening the next day is we fell and then we just continued falling. So today, you know, even if you were to try to buy it at the close, it would be at what, 110, 113. You wouldn't really have a clear defined stop loss that would give a very good risk reward. So I don't think it really looks good in the short term. If you do want to buy some, then I would buy some and have a stop below today's low. But that's essentially, that's like 20 cents away. So you would need to make up for that on the upside, and you would have to have, you know, a target of 160. So, I mean, technically, yeah, the risk reward is also still there, but it also depends on how much you're willing to risk and how much time you're willing to spend waiting for ZOM to make a move. So I would also just I'd be careful. I mean, I would like for this stock specifically right now, I would only put money that I'm willing to lose and not willing to do much with because I'm not sure what can happen in the short term on ZOMB. It had a huge green day, but as we see in the past few weeks, that every time we did have a huge green day on ZOMB, it was just a fake out and it would just be brought down lower afterward. The one interesting thing about ZOMB though is that the MACD is about to cross above the MACD line, which can be potentially a nice. It could give juice for it to fly back up to like 126. So there could be some potential in the short term on ZOMB. So Neptune Digital. Neptune Digital. So on Neptune Digital, you can see that there were multiple bull flags that met its. There was one bull flag that essentially met its target, right here, right, and to get the target on the bull flag, you take the flagpole and then you take that to the breakout point, and we met that target. So now what really needs to happen is this MACD is extremely overbought, right? So that's why we had a sharp move downward. So what needs to happen is the last time this happened as well, had a sharp move downward, and the MACD became extremely oversold down here. Okay, so I would wait for Neptune Digital to become a bit more, for it to cool off, and for it to really, for the MACD line to cross down below before buying into it, because there's still a lot of downside room to go. I'd be very careful, but if you did want to buy it, you could buy it with a stop loss below 78 cents. Sorry, 78. Yeah, 78 cents. So if you did want to buy something right now, but the risk reward isn't worth it, it's extremely overextended. It still has a lot of room to go on the downside. So I'd be very careful. BNGO doesn't look too hot right now. It needs to hold $6 because you can see that that's where most support was back in the past. If it doesn't hold $6, then it can retest this lower wick at 558. So I would be very careful about BNGO. One interesting thing though is that we are oversold on the MACD, but we closed with a huge red candle today, so that is not a good sign. I would wait to buy it closer to around $6, and then potentially longer term, you can see a move back up, and the risk reward would be there then. But currently, especially with huge downward momentum, I would just wait and be patient on BNGO. But yeah, it doesn't look too good in the short term. APXT looks very interesting. You can see that it's at multiple levels of support. 10 and 90 needs to hold on APXT. If it doesn't hold, so if you were to buy it right now, you have basically 1090 as a stop loss. Anything below it, really, and your target would be up here. So the risk reward is pretty good on APXT if you are bullish. The MACD just crossed below, but we had a green day, which is also pretty bullish. So let's see if 1090 holds. If 1090 doesn't hold, then it can fall back down to 1050. And 1050 is a very strong area of support. All of this would just be support. So all the way from September. So 1050 is a very strong area of support. 1090 is currently the support. But yeah, APXT looks pretty decent. So Twitter is just going by the overall broad market. We can see that it's in a very large bull flag, which is an extremely bullish pattern, as you can see right here. Right, so this can potentially break to the upside, but right now we are at multiple levels of support, or multiple levels of resistance. The MACD is extremely oversold. The MACD is extremely overbought, like I showed before. We still have potential room to fall back down below. Huge red day. This needs to find a bottom. And then once it creates a bottom, once the MACD potentially either bounces off of this yellow line or it crosses below and finds support somewhere in the price action, that's when I would feel way more comfortable to buy into Twitter. But currently, definitely doesn't look It definitely doesn't look like a great time to buy it right now. So here are the support and resistance lines on this bull flag a bit clearer. Um, so what would need to happen is for it to continue upward. This measured move from 43 to 80, that can potentially, if it breaks upward, then the upward target would be this length of the flagpole to the upside from the breakout point. So this is 43 to 80. That is 20. That's $37. So if we were to break upward, the technical upward target for Twitter would be $37 higher from the breakout point, which is pretty interesting. So let's see what would happen on Twitter. Twitter looks very, very nice. So does Facebook. So do a lot of these social media companies. Facebook actually helped bring the Nasdaq up. Like, it was one of the first stocks to start rallying in the Nasdaq. So Twitter definitely looks pretty good in the longer term. TLRY, we made money on this yesterday. It's at multiple layers of support, but if you were to swing it right now, it doesn't look good because the momentum isn't there. Yesterday was a much better buying opportunity because we were reversing to the upside, but today we are retesting down below. So I would wait to see what happens on TLRY. This low needs to hold at 1628. If 1628 holds, then it would retest the gap at 1908, which is the low of this. So as you can see, there's a gap here. Okay, a gap in price. So algorithms and fund managers, etc., there needs to be a fill of orders in between this price. So most of the time, algorithmically, there needs to be a filling of that gap. So let's see if TLRY can do that. I'd also really recommend everyone checking out gaps on stocks that they like to trade, because they tend to be filling, and then they end up acting as support and resistance levels. So TLRY, I would wait to see if we fall back down lower, because this is also a stock that's dependent on the IWM and economically sensitive stocks. No one is going to buy into weed stocks or buy weed if the economy isn't really doing well, right? So the IWM currently isn't, it's the lagger, right? So that is why TLRY and a lot of these other stocks aren't doing extremely well. So we have to key off of the IWM really. Last but not least, check. I had this level of resistance and support. I don't remember the last time I made a video on this, but 156. Clearly, we broke above it yesterday. We closed above it, which looked very, very bullish. We thought that, so yesterday, so look here. So the MACD was very oversold. We closed above this resistance level, and everything looked pretty good. But then today we ended up opening lower, and then we fell even lower, which is very, very bearish. So it made everyone that wanted to become bullish yesterday thinking, hey, we made a reversal. It made people lose a lot of money. So I would be careful, and I would wait to see if check can hold 146. If check can hold 146, then, potential, especially to the upside, because of the MACD is extremely oversold. But if it doesn't, then, we can see continued downside. So, if you do want to get into check, you would just have to have tight stop losses. Do not fall in love with any stocks. Don't fall in love with any trade. Don't automatically think, because I entered a trade, it has to go my way. I'm not going to accept a loss. You have to accept losses very, very quickly. You can't marry stocks and you can't marry plays, because you just end up losing a lot of money. Okay, so there is my analysis for the day. There's my analysis for multiple stocks. I hope you guys enjoyed it. Drop a like, drop a comment on a stock that you guys want me to do an analysis of for tomorrow. And I'm going to remind you guys tomorrow during the day that, hey, I'm going to post a YouTube video later today. Let me know if there's any stocks you want me to do an analysis of. So, yeah, so here is my analysis. I hope you guys enjoyed the video. Thank you so much. Have an amazing day.